market. We are going live with Mark. 5, 4, 3, 2.
Good morning, everybody. Good afternoon to my friends on the across the pond. Happy Tuesday. Welcome to the State of the Market Show. Today is Ticker Highlight Show Day. This means I'm going to share what used to be 4, but is now 5 names that we all like and 5 names that we don't like. Then I'll run through the headlines. And of course, and then we'll wrap up the show, and then we're going to go behind the paywall, behind the curtain, and we're going to take one of those ideas and turn that into a trade. We'll be in today and out by Friday, looking for a nice little win. So what makes this week different? Normally, I would have names from myself, Leisha, Hans, and Andrew. Well, you may be aware that we added a new trader a few months back, and he's starting to really dive into the fold. And I'm very excited that today is going to be the first Ticker Highlight Show featuring a 1-2 like and 1-2 leave trade from our own Tim Colby. So very excited about that. Excited to get that moving. We will. So if you want to join me and Tim and Andrew and Leisha and Hans, here's the good news. You can name your own price. If you think access to 5 traders every week who pick one idea out of all their best ideas and trade it to its conclusion before Friday is worth $10 a month, you can pay $10. If you think it's worth 5, you can pay 5. If you think it's worth 25, 50, whatever you think that value is, you can go in and name your own price. You can click this link or give my team a call, 888-872-3301. If you're watching me on X or on YouTube, hello all. Just email the team, support@optionpit.com, and they will get that link to you to join me in the Ticker Highlight Show, which, again, takes place immediately following this session. So, folks, if you were kind of sitting around waiting, like, what would motivate me to jump in the Ticker Highlight Show? Well, you've been listening to Tim be brilliant now for about a month, and you want access to his first trades. This is the best way to do it. I've seen what he's got. We're going to talk about those names. We're not going to give you the trade, but we're going to talk about those names here right now. So if you are sitting here watching, you go, boy, I'd like to do an option trade on one of those. Just click that link, name your own price, and join us. And again, if you're watching me on X or YouTube, please like, subscribe, leave a question or comment, and feel free to email the team, support@optionpit.com, and they will gladly help you through the process of naming your own price. All right. So let's start by digging into some of these names. My name here, I'm going to start with the ones we like, and then I'll get to the ones we don't like. And my name reported last week. This was a name Hans and I discussed during his agentic discussion, and it is Deere & Company. The amount of money they're going to make. A lot of people think of Deere, they think of farms. Next time you're driving, take a look at the construction equipment. A lot of it's going to be Caterpillar. The other one you're going to see is a lot of Deere. They make bulldozers, they make backhoes, they make excavators, you name it. So they're going to be heavily involved in the AI infrastructure play. I also believe that farming is kind of at a low point right now with everything going on with the Strait. A lot of people don't realize how much the Strait doesn't just affect energy prices, it affects fertilizer prices. So farming is certainly at a low point, and Deere obviously faced those issues on the 21st. But I like this one higher. I like it as a potential investment here. but certainly as a trade, holding the 200-day moving average, I do think it's going to close this gap at a minimum. That would bring it back to 550. So there's about $25 of runway there. All right, now let's get to Andrew. Andrew is in on Qualcomm. Chips are swallowing all the air in the room. Qualcomm is one of the more, believe it or not, fairly priced chip makers in terms of valuation. I do like the upside. This is one that I've was on. We were on when it was in the 80s and rode it up to like 160. Now it looks like it's going to be making another move higher. I do like it. Tesla with the SpaceX launch. It's been with SpaceX getting ready to IPO. It looks like it's in a full kind of slow building bull. And I'm at a minimum looking for it to take out the highs here. But it looks like it's going to $500. So I like this. One's from Leisha, and I like it. Now, Hans, like COHR, this is an agentic play. It hasn't been parabolic, but it's been really steady and strong. In the last year, it's gone from 80 to 380. So yeah, it's been a just consistent ramp. It did get a little pullback here, has bounced. Looks like it wants to break back above 400. So Coherent could be a fun one. And now on to Tim's. Tim loves the Miami Stock Exchange. This is one I like as well. They are one of the winners out of daily options trading that is coming to equities. They have multiple models. The chart looks pretty good. This likely fits on his new momentum model that he's running, and you can see where the momentum would be coming from. MIAX has really benefited from the increase in option volume. So I like the play. It's a little bit, a little bit under the radar, but this is one that could be a really interesting trade, especially when they add more zero GTE names and zero GTE comes to Tuesday and Thursday, which frankly, I'm surprised it's not already here. All right, now let's go down the list of the ones that we're not so sure about. Apple, I would never bet against Apple. However, it does act as a safety play, a safe haven. And part of me wonders whether when we really feel good about what's happening in Iran, whether some air comes out of Apple, just as because it's such a safe haven, park your money play. Andrew has TRMB. This is Trimble Inc. It's gone straight down post earnings and is channeling down here. And he's saying, hey, this one might be going lower. They are architect, engineers, and owners. Field systems, transportation, logistics. Pretty interesting. And again, chart doesn't look that great. So I can see why Andrew doesn't love it. Leisha, Nebius Group. And this has been a flyer. And, this is a hard one to bet against, but I'm interested to see what Leisha sees in the charts. My guess is it's bumping up against resistance, and she sees that it could kind of roll over. It's had such a crazy run since April 1st. It's up 114%. That's pretty crazy for a month. That's like Intel-like. Hans is saying KKR. Now, this is kind of a private credit play. It looked really ugly down in the 80s, but got a nice breath back above 100 and then now has started to kind of roll back over. The one thing that might save KKR is if the bond market does manage to kind of hold up here, and bonds are catching a bid here after oil is coming off. There's a whole petrodollar bond trade. And Tim, his one to leave is KB Homes. Now, you could argue home builders could have a nice little run if interest rates start to collapse. Look, KB is the worst of this group in terms of performance and execution. If you want to get into the home builders, I like just about every one of these better. Toll Brothers, DR Horton, DRI, I think. Nope, DRH. DHI. Thank you. I used to make markets in this thing. You'd think I'd know it. DHI might be my favorite out of this group. DR Horton. You've got Lennar. All of these names I like better than KBH if you're looking for a home builder. So just to run down again, the ones we love: Deere & Company, formerly John Deere, Qualcomm, Tesla, COHR, Coherent, and the Miami Stock Exchange, MIAX. All different reasons, and we're going to go behind the paywall and pick a trade out of these. The ones to leave: Apple, Tremble Corp, Nebius, KKR, and KB Homes, KBH. So those are the 5 that we're thinking, maybe it's time to take some money off the table here. All right, so now that you've seen our names, we're going to go trade these in about 10, 12 minutes. You can join that trade by naming your own price. Just click the link in the chat. And again, if you're on YouTube, shoot us an email, support@optionpit.com. Same for if you're watching me on X. Let's take a look and talk markets. Futures are moving, and it is on the back of oil. USO has broken lower today. It's down about $3, still sky high, and a very long journey back down into the 100s. But bonds coming off, as I showed you, is giving some relief, oil coming off is giving some relief to the bond market. And if the bond market is going to give you some relief, that is going to start lifting the rest of the market. You're going to see some strength, and you should see some strength in the industrials. Right now, the Dow not showing that because oil names are off. You should see some strength in the S&P. It'll also be good for the NASDAQ. It makes cost of capital cheaper. That wins for stocks. Now, the one downside with bonds going up, and this is the one scenario that I've kind of I'm keeping an eye on. If traders really feel like the bottom tick is in for bonds and they want to capture some yield on their treasury positions, the 10-year now crossing back below 4.5%, the 30-year getting near 5%, the 5-year at 4.2%, the 2-year at 4%. Stocks at an all-time high. There's a scenario where you could say to yourself, in the next 30 to 60 days, I may get better performance out of bonds than I'm going to get out of stocks. And you could see some money come out of stocks and into the bond market. Similarly, how you need less bond selling to buy oil. So you get those two together, and it could lead to a nice little bond rally. And that could actually take a little bit of air out of the overall stock market. It's something to keep an eye on. Looking at markets as a whole, we are way above my median line and my pitchfork. If I pull out to the daily, let's see where I'm set up. We are currently at a new all-time high. And, if we wanted to keep running, we could run to 7,700. We could move that much. if my whole bond scenario doesn't happen. And I'm not saying that that is a surefire thing. I just want to lay out the different risk ideas there, the different risks that may exist out there. And the bond market being really strong tends to be bad for stocks. So they've been correlating. Part of me wonders whether you're going to see a little bit of break in that correlation here, if there is some sort of firm peace deal. Now, the other piece I'm watching, people want to know, Mark, is this rally real? What do I look for? And I'm really watching VIX. And I want to take you to where we closed on Friday. On Friday, we closed with the VIX at about 1670. And you had the May future at 1965, almost 3 points. Folks, that is incredibly wide. Right? I could run a John Deere tractor through that. That is so wide. See, I went full circle there with that joke. Today, and this is what I was watching for, you have the VIX up 18 cents. You actually have VIX futures down significantly. So you've got this spread tightening to about 2 points. Now, by now, it should be closer to like 1.5. But 2 points, the fact that we went from, really 2.5 last week, and today we've collapsed to 2, that tells me that the market maybe is buying into a little bit of what we're seeing here. And you may have a real opportunity for volatility to make a real threat at the 15s for the first time in some time. Story number 2. Fed Chair Kevin Warsh hints he's pulling a Greenspan. All right. So what does that mean? Well, one of the arguments to be made for the late 90s, early aughts is that they allowed productivity to happen, right? The internet did, yes, there was the dot-com bubble, but that had zero effect on how much productivity increased with internet and internet getting faster and faster. And we're starting to see some of that with AI. I was listening to Mark Andreessen talk AI, and he was talking about how coders are not really, the layoffs that you're hearing about where they're blaming AI. He basically said they were overstaffed and they got fat and they're using AI as cover because real coders are not being fired. Real coders are working with AI agents to do their coding and managing them, and they're seeing their productivity explode. So that productivity explosion, that should be deflationary. Now, inflationary near term, you're seeing obviously energy prices are throwing everything for a loop. Data centers, water, food prices, with farming being a problem. There is inflation out of there. Is some of it transitory? That's a good question. But being open-minded and allowing AI to maybe start to really increase productivity and lower costs for everybody around is going to be a net benefit to society. And, I'm not of the doom and gloom around AI. I know there are doomers and gloomers. But, I think the way this is going to be moving, this is going to be kind of a discussion I was thinking, like Mark's homework for the summer is to build 1 to 2 AI agents for himself. That's going to be part of what his curriculum is in what we call dad school over the summer. And, by the time he's in college, I want him to have 10 or 20 of these agents working for him, and then maybe even sub-agents. That's right. Your agents will have agents. but it'll make him really productive and really good and allow him to do other things as well. So I'm excited for him. And I think that the more I look into this and, will he work for a giant corporation? Maybe not. But is he going to start his own thing? Maybe. Comes from two parents that do it. He's going to have guidance. So the point is, don't expect a bunch of rate hikes. And the moment we start to see inflation, I think, suck out from, some sort of ceasefire and channels start to reopen, shipping channels, inventory channels, as those reopen, prices will come down. Food may take a little bit longer just because we're already at the planting season. We're actually already well into the planting season. Lauren and I were in beautiful Ottawa and Utica, Illinois by Starved Rock State Park. Lauren's one of Lauren's best employees and formerly Valentino's nanny, got married over the weekend. So we drove from Chicago out to beautiful Utica, and the corn is already planted. So we may have missed that part of the planting season. Obviously, I'm not an expert in farming. And our last story, and this leads to what we were talking. The OpenAI CEO admitted he was pretty wrong on the social and economic fallout from ChatGPT. He expected entry-level white-collar bloodbath by now, and it's not happened. And there's a reason. All right? There's a reason for this. One is demographics. Population is getting older. You're not really going to have to lay off people. You're going to allow retirement to happen. And the AI needs help. It can't run on its own. It can't find its own jobs. Right? AI is a worker bee. Right? It's the right. Maybe it'll get different in 20 years and it'll be, actually truly able to think. No. AI can perform tasks. It can find answers. It can filter. But right now, what it can't do is actually be the idea. AI isn't going to, on its own, say, write me a novel. It can't come up with an idea on how to trade. Right? If I tell it, hey, look for these things and pull trades that make sense, it can do that. But can it come up with a trade idea? No. And in fact, somebody tried it and that thing got worked. All right, got absolutely worked. So AI is, at least for now, not taking down white-collar jobs. A lot of the blame on AI, and I'll circle back to what I just said, some of these firms were way overstaffed and got really fat. And that's kind of industry-wide. All right, now, are there effects? It's definitely a problem for some of the entry-level jobs, right? Like investment banking. Because we have all these agents to do the research, where I used to need 20 entry-level investment bankers. Maybe I need 5 now. So there's a problem. But when you interview in a few years, they're going to be interviewing you and your AI agents. That's going to be your job interview. Think about that. And that's why my kid's getting ahead. All right, folks. It is 10:27 already. We are up against it. The Dow is now flattish. S&P is up 0.8%, and the Qs are up almost 2%. VIX still holding here. I think we'll probably hold this, but keep in the back of your head that bond market kind of narrative I gave you. Not saying it's going to happen, but That is a legitimate risk that I don't think a lot of people are discussing. We're now going to go behind the paywall for the Ticker Highlight Show. Once again, the names we like: Deere, Qualcomm, Tesla, Coherent, COHR, MIAX Holdings, MIAX. The names we don't like: Apple, Trimble Inc., TRMB, Nebius Group, NBIS, KKR, and KBH. We're going to be looking at these 5 names behind the curtain. If you'd like to join us, this is going to be Tim's first day with Ticker Highlight Show. As we run through the trades, you can click the link, name your own price, and get involved. Or again, if you're watching me on YouTube or X, give us a like and subscribe. And if you want to join this offer, shoot us an email, support@optionpit.com. All right, everybody. Happy Tuesday. I just want to, I didn't get we had a nice long weekend. I just want to say a big thanks to all of our veterans listening. And obviously a massive thank you to those that gave up their lives in service of our country, and those who served and have now passed. Obviously, we wouldn't be having this discussion if not for all of you. So thank you for what you do. All right, everybody. I'm Mark Sebastian. I am your only option. Make sure to join me tomorrow at 10 a.m. as we're here every day for the State of the Market. Have a good day.